Wall Street is the only place on earth where a man with a PhD in quantum physics and a man who genuinely eats crayons can stand shoulder to shoulder, equally confused, equally certain they are right. And today we are going to meet both of them. In fact, we are going to meet all 6 of the investor archetypes that make up the beautiful, chaotic, deeply irrational ecosystem of modern financial markets. 6 types, 6 completely different strategies. 6 completely different ways to lose money while being completely convinced you have figured it out. I promise you will recognize at least one of them. You may be one of them. Let's find out. Type 1. The Value Investor. This is the man who owns The Intelligent Investor in hardback, paperback, and audiobook, and has strong opinions about which format conveys the message most accurately. He owns khakis in at least 4 distinct shades of beige. He drinks lukewarm coffee, not because he forgot about it, but because he believes drinking it immediately is a form of impatience, and impatience is the enemy of compounding. He has read every Warren Buffett shareholder letter ever published. He has read them multiple times. He considers the 1986 letter particularly underrated. He will not stop talking about moats, intrinsic value, margin of safety, the difference between price and value. He will explain the difference between price and value to anyone who makes eye contact with him at a social gathering. He has spent more than 400 hours analyzing a single company's annual filing. He has opinions on the footnotes. He has highlighted the footnotes. If you ask him his year-to-date return, he pauses, takes a slow sip of lukewarm coffee, and says, "I actually invest for the long term." Translation: he has been underperforming the index since the second Bush administration and has constructed an entire philosophical framework that explains why this is actually correct. He is not losing. He is being patient. He is the human equivalent of watching paint dry. And he would tell you that if you understood compounding, you would realize the paint is actually doing something extraordinary. Ladies, if you are looking for a man who has never tried a new restaurant, has strong opinions about mattress depreciation, and considers a Sunday afternoon spent reading SEC filings to be genuinely relaxing, this is the man for you. Type 2. The Hustle Investor. He wakes up at 4:30 a.m., cold plunge, David Goggins' podcast at full volume, 17 minutes of what he calls meditation, which is actually just him standing in the kitchen, staring at the wall, and thumping his chest rhythmically. His portfolio consists of 3 meme stocks he found on a subreddit at midnight, a Forex trading course he purchased for $200 and has watched 11% of, and a pending DUI from last March that his lawyer says looks manageable. In his room, a Hustle Harder poster in a frame that cost more than the poster, 3 empty Red Bull cans arranged in a triangle on his desk, and a suspicious white powder on the nightstand that he has not addressed with anyone. Do not make the mistake of asking him about his investing strategy at a social event. He will tell you, "Bro, the best investment is in yourself." Then he will tell you about his passive income streams. His passive income streams include sports betting, a crypto meme coin he heard about from a guy named Devin at a parking lot at 2 a.m., and charging people $20 to attend a networking event that was him, Devin, and a Bluetooth speaker. He describes himself as an entrepreneur. He does not describe himself as an investor because that word sounds too passive. He is not trying to beat the market. He is not trying to understand the market. He is trying to beat his charges from March. And right now, that is the priority. Type 3. The Chart Whisperer. This is the man who looks at a stock chart the way a conspiracy theorist looks at grainy satellite footage, absolutely convinced that the pattern is there, that it means something specific, and that everyone else is simply not paying close enough attention. He has 12 monitors, not because he needs 12 monitors, because he respects the craft. He sees bull flags in his morning coffee. He sees a head and shoulders formation in the condensation on his window. He has named the recurring pattern on the bathroom tiles. He speaks an entirely private language, a dialect understood only by the degenerate few, that includes phrases like ascending broadening wedge, death cross confirmation, and the Ikimoku cloud is speaking to me. He does not know what the company does. He does not care what the company does. Fundamentals are a crutch for people who are afraid of the chart. Earnings reports are for people who don't trust themselves. He doesn't do research. He draws lines on things, and then he trusts the lines. His heroes are not Warren Buffett. His heroes are Picasso, Monet, people who looked at the world and saw something nobody else could. Do not walk up to his 12 monitors and question his chart. You would not walk into the Sistine Chapel and ask Michelangelo if he had considered a different ceiling. Same energy, same level of disrespect. Type 4. The Crypto Bro. He turned $400 into $13,000 and then back into zero across a period of approximately 11 months. He describes the journey as formative. He lost his entire net worth in a rug pull on a meme coin called Fartcoin, which, to be clear, had a white paper, a Discord server, and a roadmap that described Phase 3 as mass adoption. He now holds 12 NFTs of pixelated animals that he acquired during what he describes as the correction, and which he is confident will appreciate once the broader market matures. He lives in a van. Voluntarily, he calls it going off-grid. It is parked in a suburban cul-de-sac 20 minutes from his mother's house. He believes fiat currency is a coordinated government scam designed to suppress the working class. He processes all of his transactions through his mother's Venmo. He has not filed taxes since 2021 because the blockchain, he explains with genuine conviction, is borderless. He spends between 6 and 8 hours a day in Twitter Spaces, arguing about the philosophy of decentralized finance with a rotating cast of 14-year-olds. He does not actually understand how the blockchain works. He knows the vocabulary. He can say trustless, permissionless, composable infrastructure layer in a tone of voice that sounds like understanding. It is not understanding. It is very good mimicry. But he is going to change the world, and he will explain exactly how, for as long as you are willing to stand there. Type 5. The WallStreetBets degenerate. He worships a man named Roaring Kitty. He subsists primarily on Hot Pockets and Monster Energy, consumed at a pace that his doctor, if he had one, would describe as aggressive. He has not seen natural daylight since GameStop peaked in January 2021. He is aware of this. He is unbothered. He considers Warren Buffett a coward, specifically and personally, because Buffett has never, in 93 years of investing, gone all in on weekly out-of-the-money SPY calls that expire on Friday. His investing thesis, stated plainly, is, feel something strongly about a stock, buy call options expiring in the next 4 to 7 days, watch them expire worthless, refer to the experience as getting battle scars, and repeat. He does not read earnings reports. He does not do technical analysis. He does not look at balance sheets, management teams, competitive moats, or any form of due diligence that would require him to open a document longer than a Reddit thread. He feels things, and to him, with genuine conviction, that is more than enough. He has never heard of a Roth IRA. He has never heard of it because a Roth IRA is a vehicle for people who believe in the next 30 years, and he is fully and completely committed to this Thursday. When the calls expire worthless, which is most Thursdays, he does not reflect. He blames the market makers. He blames Jerome Powell. He blames a coordinated institutional conspiracy to specifically target his positions. Then he opens the app again. Type 6. The perma-bear. He doesn't blink, not infrequently, just not much. It's something people notice. He lives inside Excel. He calls every asset class a bubble: equities, bonds, real estate, commodities, and at one point during a particularly dark February, a small painting his wife purchased at a local gallery. In 2015, he watched The Big Short. It was not a film to him. It was a document, a prophecy. The first time in his adult life that he felt truly, deeply seen. Since then, he has been short the market. He has been wrong 137 times. He knows the exact number. He tracks it in a tab he calls pre-reckoning, and he reviews it monthly, not as a record of failure, but as a record of patience. His answer to every loss is identical. One day the market corrects. One day the Federal Reserve is exposed for what it is. One day the synthetic leverage unwinds and you will all look at me and you will understand. He is short the market. He is short the economy. He is short, in a philosophical sense, the concept of things generally working out. He does not want money, not primarily. He wants to be standing in the wreckage of Western finance, holding a printout of his short position and whispering, "I told you so," into the silence. Until that day arrives, he will remain in his apartment, surrounded by water jugs, canned goods dated through 2027, and a folder of Q1 earnings reports from 2012 that he considers primary source material. He is prepared for the collapse. He has always been prepared. The collapse has not consulted his timeline. 6 types of investors, 6 completely different philosophies, 6 completely different ways to engage with the market, and one shared, universal, quietly devastating truth that connects all of them. Nobody, not the value investor with his 400-hour research process, not the chart guy with his 12 monitors and his ascending wedges, not the crypto bro with his borderless blockchain, not the degenerate with his feelings, not even the permabear who has been preparing for the end of civilization since 2015. Nobody actually knows what is going to happen. The market is the only system ever invented where maximum preparation and minimum preparation produce shockingly similar outcomes over a long enough time horizon, and somehow that is either the most comforting thing you have heard today or the most terrifying. Which one of these are you? Drop it in the comments, and if someone in your life fits one of these categories perfectly, send this to them. They won't think it's about them, they never do.